Welcome to today's live video. I wanted to make sure that I answered these questions today. It's the end of the day on the Eastern time zone on the east side of the country, so it's what, 5:24 p.m. People on the West Coast probably are just waking up. But anyways, I wanted to make sure that I answer 3 questions that came in from my last week live video regarding what you need to be thinking of once you start making a certain amount of money from a tax planning perspective. So I got around 11 questions. Most of them were regarding these 3 topics, so I just wanted to make sure that I go ahead and answer these questions, because normally when so many people have the same question, that means that a lot more people do have that question as well. Hi Marcella, thanks for jumping on. And so last week I was talking about what are some of the things that you need to start thinking about once your income start increasing in your business, and I mentioned 4 things that you can start thinking about. One I talked about is, seeing how you can restructure your business from an entity selection standpoint, S Corp, C Corp, if you're going to do one of those, a combination of those, if you're going to split your businesses. So that's one thing that I addressed. And if you also want to see that live recording, you can also check my few videos done, and you will also see that recording as well. The second thing that I talked about is how you compensate yourself as someone who's working in the business and also someone who is working on the business. That's different as well based on how much income you're making and based on what entity you're under. Andrew, thanks for joining. Also, the third thing that I talked about, I think it was about tax-free reimbursements, how you can pull reimbursements out of your business. And the 4th thing was how you can move around cash in order to lower how much tax you're paying and also keep that cash within your life somehow, maybe, to the kids or some way. You can get creative once your income is starting to increase. So based on that recording, I got these questions and I'm going to answer them now. So the first one has to do with, what income level would, someone should be considered tax planning. And you can look at it from this perspective. You can be making your first 100K. And for instance, if you're a business with not a lot of overhead, then you'll know that your bottom line number is going to be higher. So you could be making your first 100K up to your first $1 million. What if you're up into the, the high 10 millions and more income bracket? What's up, Sean? So it doesn't matter how much money you're making. What really matters is how much tax you're going to be paying and how you'd want to reduce it. So you could be making your first 100K or your first 500K or your first $1 million, congratulations, or your first 10 million. It really doesn't matter. Once you're able to see that your income is increasing, you look at your expenses and you're not spending all your money, then that's when you want to see how much you can save and also start planning to keep some of that money, and that's when tax planning will work for you. I must say that the more money you make, the more creative things can get. The bigger the loopholes are. Basically, the IRS rewards business owners that are making a lot of money. That's why they always say rich people don't pay a lot of taxes, because there's a lot of savings once your business start making a lot more money. But if you're making your first 100K, there's still option for you. I'm working with a plan right now for actually an independent contractor that she's just making her first 65 to 70K, I think her income is, and tax planning does still work for her, and all we have to focus on for her is how she move around her income, because she does want all of that income in her household, so she can't really put away a lot of money. So it's how can she move it around so that she don't have to pay a lot of taxes on it. The second question I have, so I hope that answers your question. So you don't have to wait until you're making $1 million. You can still get it if you're making your first $100,000 or even $70,000. The second thing I wanted to address also is how much do I pay myself? I don't know how much you want to pay yourself based on how much money you need in your personal life, but for clients that I work with who are S corporations and C corporation, we do a compensation analysis for them in order to see how much you're gonna compensate themselves. Rashida, I haven't seen you in a long time. How are you, girl? to see how much you're going to compensate yourself. So if you're an S corporation, make sure that you have documentation of what your compensation is, because as you know that S corporation gets to avoid a lot of payroll taxes, and you know the taxmen really don't like that, so you have to have documentation for that. So we do an entire analysis for reasonable compensation as documentation for S corporate. So how much you want to pay yourself, it just all depends on how much money you need your personal life. I will say that taking reimbursement should come first. So you take all the reimbursements. So say for instance you have $100,000, you take reimbursements first. So if you have 17,000 reimbursements, you take that first. Then after you take reimbursements, then you can look how much you can compensate yourself. And then after that you can take, some people call it draw, some people call it distribution, some people call it owner's pay, whatever you want to call it. It's just basically when you write a check to yourself or when you move the money. Not complicated at all. So how you pay yourself, you have three ways. You take reimbursements, you do payroll, which you will get a W-2 for, or you can also do a distribution or a draw. So those are the three ways. How much you pay yourself is all dependent on how much money you need in your personal life, how much money your business is making. Now the third thing, what you said, I have to leave to start a conference. All right, see you soon. Recommendation for a good tax person. I thought this one was really interesting, and actually two person asked that question. So what I would say from my recommendation, of course me, of course but anyways, so if you don't think me, what would you want to look for is basically, are you looking for someone to do your tax return, or if you're looking for someone to save your money? So that's two different conversations. If you're looking for someone to only file your tax return, then you make sure that person is actually competent in business tax filing, that they have other business clients and they can actually file a correct business return. If you're looking for someone to help you save money, then you need to be talking to them right now, and they need to tell you some stuff, basically show you some numbers on what they can do to help you save money. So that's basically how you know, is because you get to see the numbers right in front of you. I've posted examples of tax savings a lot, so you guys can see some example. You know, their format may not be the same, but you just have to know, if they're saying that if you do this, they should have a number to say it will help you save $10,000, it will help you save $6,000. So that's basically how you know, is basically seeing it in action, seeing what the recommendations are basically. But you know, there's a difference. Don't expect someone that just preparing your tax return to be helping you tax plan, because sometimes both people don't have the same skill set. But anyways, that's it for today. Hope to see you again on my next live. And as I always say, remember, the only way to save money on your taxes, to pay less to the government, is to have a tax savings plan. That's it for today. See you soon.